Director Octavio Marenzi is with us, CEO at Optimus. Octavio, how do you feel about the market, which has been hitting record highs, but certainly has some volatility? Some of your thoughts?
Listen, I think the market looks like it's at a very, very high level. Don't want to say it's overpriced, but I've been feeling that way for some time, and I feel that way all the more now. So I'm getting slightly nervous at these stock price levels, I must say. I think it might be the time to take some money off the table and put it into something a bit safer and see if things don't correct at some stage in the not too distant future. Hard to see how this rally can keep going or what's even pushing it up.
So at this point, when you say you're nervous, maybe take some profits. And we've seen that where people are making shorter trades. They'll buy a dip, they make some money, and they take some money off the table. So take some profits in what specifically? In everything? In tech?
I think, well, first of all, certainly in tech, I would definitely say that is a place to look. I think other areas like gold, for example, some certain commodities like that, some precious metals too, are looking like they're very richly priced at this stage. So I think that would be another area to think about doing that for those people who have those investments. The question then becomes, well, what do you do with this money and how do you do it? I still think, and I've said this to you before, I think short-dated US Treasuries are looking quite attractive as a very safe investment that yields over 5%. So that is an attractive place to do that if you want to take some risk off the table. So that's the kind of thing I would be looking at now. These stock prices do look, I'm not dizzyingly high, but they certainly make me a bit nervous in terms of where they stand now.
Right, understood. So far we've gotten a lot of bank earnings. We kicked those off last Friday, most of which have been double beats. Some of the, when you say double beats, that's great news, but some of them were less than the prior year, or net interest income was, going in the right direction, but not as much as expected. What were your takeaways from some of the bank reports?
Well, I think, yes, there were double beats quite systematically amongst the large banks, but that doesn't mean that much, right? I mean, the analysts might be underestimating where they think they're going to go, and the bank's guidance in the past might have been fairly muted in terms of where they thought they were going to be this year. But I think overall, the story is basically this. We saw investment banking do very, very well compared to this time last year, so a big increase there, still below historical levels there. Certainly the amount of activity we saw in 2021 or 2020 is not something we've reached yet on the investment banking side. So there's still quite some distance to go there. We saw a very good quarter for equities trading in particular, and fixed income trading to a lesser extent, but also very positive there. On the sort of Main Street banking side, things were a bit more nuanced in the sense that we saw some banks do reasonably well, but most of them basically sort of erosion in their net interest margin. And that's been gradually happening over the course of the past few quarters, or maybe even the course of the past year, as the impact of high interest rates starts to really start to crack at that. And we also see them put away much larger provisions for losses on loans. So many of the larger banks, JP Morgan, for example, Citigroup, are expecting to see some deterioration in the quality of their credit portfolios over the course of the next year or so. So that basically means a lot of people on the consumer side, credit cards and things like that, not repaying their loans, and some stretches basically on the commercial banking side as well, maybe particularly in commercial real estate. So that's what the big banks are telling us they expect to see in next year, which basically means they're expecting a bit of a rough patch coming.
All right. So that being said, within the big banks, do you have clear winners in your mind? You said maybe there's some frustration with Jane Fraser's turnaround plan for Citi, for example. When we think about the big banks, they always seem to get a lot of credit. For example, today, Bob Diamond, formerly of Barclays, was saying the big banks are the big banks and they just keep getting bigger, the four biggies. Of those names, right, and basically thought that there would be more consolidation in the regionals. That being said, the big banks, are they all positioned well, or do you have some concerns about any of the big banks?
No, I wouldn't say they're all positioned well. I mean, yes, big banks tend to get bigger. That seems to be sort of baked into the system always, particularly once you start to see stresses at the regional bank level, which I expect to see. So the regional banks are nowhere near as well positioned as the large banks. So absolutely, I think we'll see some consolidation there and some more stresses come out maybe later this year as we see sort of how things unfold with the new interest rate environment. But so, yes, we're going to see some stresses there. There will be some consolidation either amongst regional banks or with the very large banks snapping up more regional banks as they go through some difficulties. So, but within the large banks, It's a pretty broad dispersion. At the very top, I would say you see JP Morgan. Jamie Dimon has done a phenomenal job of steering JP Morgan through the last few years, and their return on equity is over 20%, so they're doing very, very well. Then less well, people like Wells Fargo, who basically seem to be sort of shrinking slowly on all fronts. So if you look at their consumer banking, their commercial banking, it's basically shrinking by single digits. Their deposits are shrinking by single digits. The loan levels are shrinking by 2 or 3% a year at Wells Fargo. So that is not really a recipe for success. It seems to be just a gradually shrinking bank overall. And then you mentioned Citigroup. I mean, Citigroup's stock over the course of the past few years has been a bit of a laggard, didn't do terribly well, but had a big turnaround sort of in October of last year when the CEO, Jane Fraser, came with a large transformation scheme. So she basically came and said, we're going to cut out layers of management. We're really going to focus on our costs. We're going to be leaner and meaner. And we're going to drive greater revenues. And the stock price has been rewarded enormously over the course of past 10 months on the back of that. So it's done very, very well indeed. Now, all that performance, this run-up of, I think, 50, 60% in terms of the stock price at Citigroup, which is an astounding number for such a large institution, is basically on the back of future promise. The market's basically giving Jane Fraser almost unlimited credit in terms of saying, yes, this turnaround story is a really good one and it's got legs and it's going to work. I will say so far it's not evident in the numbers. So it's hard to point at anything in the results so far at Citigroup that really points to some sort of dramatic transformation. So the markets might start to get disappointed in the next few months. I would say she's probably got a full year to put this into place. We're about 10 months into it now, but I think the market's going to start to expect to see real results, real hard results on paper. We can actually see profitability going up. And if Jane Fraser's not able to deliver that, well, I think we might see some readjustment in terms of what the market thinks a fair valuation of that bank is.
Yeah, you're not particularly impressed with Wells Fargo at this time, right? Quickly.
Not overly, no. I mean, I think I think Wells Fargo went through a period where they seemed to not be able to get anything right, and they got into trouble with the feds and with the government, and this is an old story now, going back a few years, but that seemed to have had a profound impact on the bank overall, and they lost some key customers. They lost some large state governments who didn't want to do any more business with them, and it seems it's had a profound impact, and they've become a very, very cautious bank overall, very afraid of stepping into some sort of regulatory trap again, and I think that's damaged them. Once banks get once they start to think our main purpose in life is to make sure that we don't fall afoul of regulations, and that is what we have to focus on, well, then the commercial side of the banks, I think, starts to suffer a bit, and I think that's what we're seeing with Wells Fargo. Basically, there's no real reason they should be shrinking this way. But that seems to be something that started when they had all these problems with opening all those fake accounts and things like that. It's had a real impact on the psyche of the institution.
Yeah, and just quickly, I'm out of time, but the regional banks, would you not invest in the group because you're concerned about the takeovers or mergers that may happen because of so much exposure to commercial real estate for this particular smaller, community type banks, regional banks?
Well, listen, usually takeovers are a very good sign. You want to position yourself and invest in those stocks you think are going to be taken over by competitors or larger institutions. However, the way it might unfold, and the way it has unfolded so far, is that these are emergency fire sales and the shareholders get wiped out entirely. So that's not the kind of thing that you want to be investing in. So I'd be very cautious about regional banks at this stage and putting money into them. It's very difficult to interpret their balance sheets. We're professionals. We look at that all the time. Yeah. It's very hard to figure out what's really going on inside a regional bank's balance sheet. You have to really know your way around that to look for good investments there.
Yeah. Thank you for that response. I'm glad I asked that last question. Great. If we all knew who the takeover targets were and we could just make money on the takeover every time, wouldn't that be wonderful? Sure. Nice to see you.
It's like I say, you should buy low and sell high. You can do that great.
Oh, I like that. Okay. I'll use that from time to time, Octavio. Thank you. Octavio Marenzi, CEO at Optimus.